Hey, I'm Brian Burke, and you're listening to the Passive Investor Show.
Before we continue with the show, I want to provide the PI listeners with an opportunity. Like me, you probably invested in the stock market and found out that you could do better with real estate. You probably have invested in real estate yourself and found out that you created another job. You're already busy making a living to provide for you and your family. You don't need another job managing tenants and organizing repairs. What if there was another way? What if there was a way for you to benefit from real estate without having the burden to be the landlord? At the Fortes Company, we partner with investors like you and provide opportunities that are specific to your investment criteria. We operate the investment and you enjoy the benefits of passive income and everything that comes along with real estate. You deserve to keep your spare time and continue to make memories with your family. Go to www.investwithfortes.com and see how easy it is to become a passive investor today. The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm John Fortes. Goal and purpose of this show is to be a resource to passive investors and help them master their investments in real estate funds. My guest today is Brian Burke. I had the pleasure of meeting him at Michael Blanc's conference last year, the Dealmaker Live. It was a pleasure. And prior to that, me and you were bumping heads in Bigger Pockets forums. We weren't bumping heads, but basically just commented and leaving feedback. You know what I mean. CEO of Praxis Capital Incorporated, a vertically integrated real estate private equity investment firm. Brian has acquired over $500 million worth of real estate over a 30-year career, including over 3,000 multifamily units and more than 700 single-family homes. With the assistance of a proprietary software that he wrote himself, Brian has subdivided land, built homes, and constructed self-storage, but really prefers to reposition existing multifamily properties. Brian is the author of The Hands-Off Investor, an investor's guide to investing passively in real estate syndications. An investor's guide to investing in passive real estate syndication, and is a frequent public speaker in real estate conferences and events nationwide. Brian, we're welcome to have you.
Hey, I'm happy to be here, John. Thanks for asking me.
Tell us a little bit about your background and how you got started.
Man, I started investing in real estate like a lot of people do, just, one house at a time, basically. And my first investment was about 31 years ago in a single family home that I bought to rent out. And then, then I went to flipping and, started flipping just a few houses here and there and learned the ropes. And then I was doing more of it and doing quite a few houses a year. And then I was doing a couple dozen houses a year. And then the whole market collapsed, right? And when the market collapsed, I started flipping like 100 houses a year. It just got absolutely crazy. And our business just grew enormously through that process. And we grew a footprint both on the single family side and in the multifamily side. We've been doing multifamily now for about 20 years. And we really grew that platform after the market collapse and, presented all kinds of opportunities for us. And, now here I am, $500 million in real estate later and 3,000 units in our portfolio right now. And looking to grow, although, the COVID pandemic has put a stop to most of our activity right now. we're still, have a lot of hope for the future, and we'll be looking to grow when the right opportunities present themselves.
That's pretty cool. I want to go back to what was your line of work prior to flipping and jumping in?
Yeah, well, when I bought that first investment, I was literally working in a grocery store as a checkout clerk, making like $13 an hour, and I bought my first rental property, and I didn't even own my own house. And then shortly after that, I got into law enforcement. I worked in law enforcement for 14 years, and during that time, it was cool because I was working nights and weekends, which meant that I had essentially the whole business week off. So I was doing real estate by day and law enforcement by evening.
I love that. I love how you transitioned, but I want to know exactly when you first started working with passive investors. How did that look like?
Yeah, I was growing my real estate business. This was about 18, 19 years ago. And I wanted to go full time. I wanted to get out of the law enforcement biz and just go into it full time. So I put in my 2 weeks notice and quit my, government job with a pension and benefits and, and all that stuff, to do real estate full time. So I had to figure out how I was going to be able to grow. So I thought, well, I need to raise some capital in order to grow, because I didn't really have a lot of money of my own. So I went in to the police station. I told all the guys that I had put in my notice, and I invited them all down to the community center. I said, hey, I rented out the room at the community center. You guys all come. I'll talk to you about what I'm doing next. And so everybody came, and, I gave this talk about real estate and what I was doing and everything. And I said, hey, if any of you guys want to invest with me, I'll split the profits with you. And I created a fund. I walked out of that room with $500,000 of investment commitments from 28 guys carrying guns. And that was my first introduction to raising private capital.
What was that? What was the first deal you ever used that capital towards? I'm curious.
Yeah, so my strategy was to buy houses on the courthouse steps at foreclosure auctions. And so I literally showed up at the courthouse steps with a cashier's check, and I was bidding on foreclosure houses, and that's what I used it for. So I was literally buying homes on the courthouse steps with it.
What was something you had to implement since working with passive investors? Was there a particular system, a process? What's something that you had to really streamline quickly?
Well, first and foremost, I had to streamline everything quickly to make sure I didn't lose anybody's money, because if I lost any of their money, I was a dead man, and I knew it. So the first thing I had to do was make sure that I knew what I was doing. And I spent about 4 years, maybe even 5 years, tracking every single foreclosure sale that went to auction and what happened, and did title searches on them and all this kind of stuff, so I could learn every facet of the business before I bought my first one on the courthouse steps. And that's when I started doing the fund, was shortly after I had gained some experience in actually doing it. So I spent 5 years learning it, about 2 or 3 years doing it, and then I raised the money from the investors in the fund. So really, it was just all about perfecting everything I knew for the systems and title searches and tracking foreclosure sales. I had to write my own software to track foreclosure sales that were coming up, and track postponements and track title searches and all that different stuff. And it was pretty complicated, and had to scale all that up all at once.
That's pretty cool. Now, when did you start transitioning to multifamily?
That was right around that same time, actually. I had bought a couple houses on the steps just before I started the fund, and I was kind of doing like a buy one, flip one, buy one, keep one kind of a thing. So I had a couple of houses that I had bought as rentals and fixed them up, and I had tenants that were moving out. So I'm like, what, I'm going to sell this now, and I'm going to take the money into a 1031 exchange and buy an apartment building. That seems like the thing to do, right? That's what you do in Monopoly, is, you trade in the 4 red houses for the green hotel, or the other way around, or whatever it is, So I was gonna play Monopoly in real life and jump into multifamily, but I had no idea what I was doing. So I went to a real estate agent that was selling a lot of my flips. And I said, hey, I'm thinking about getting into this multifamily thing. I don't know anything about it. Can you help? And I knew he could help because he was a CCIM, which is a commercial, it's a broker that specializes in selling commercial real estate. So I said, I need to learn the ropes here. So he sat me down in his office and totally showed me how to read an income statement, what to look for, and all this different stuff. And it was a great lesson in, how commercial real estate works. And then like a month or two later, he got a listing on a 16-unit apartment building, and he told me about it before it went on the market. And I put in an offer and I got it. And that was my first multifamily. It was a 1031 exchange. The seller, I got a lender to do a loan for, I think it was either 70 or 80% of the purchase price. The seller carried back 10% of the purchase price. And then the rest of the purchase price came from my 1031 exchange. So that was my first one.
That is pretty cool experience that you actually were basically on the job training with the CCIM.
It was really cool. Yeah. And to use seller financing and, and all the tricks of creative financing that I had learned throughout the years, and I got it all to work. And, it's not easy. I mean, everybody wants to think creative financing is an easy thing. And you read the book and you go, oh yeah, I can buy real estate with no money down. And it's really, really difficult to do that. What I was fortunate for is I was too dumb to realize that it was hard to do that. So the first property that I ever bought that I told you about back, 31 years ago, I bought it with no money down. The seller carried the entire down payment because I didn't know any better. I thought, oh, you just ask the seller to do it and they'll do it. So I asked and they did. And, I never imagined it was going to be hard. So, I just didn't know any better. And then when I bought the apartment complex, I thought, oh, of course the seller will carry back some of the down payment. That's always what happens. I've read all the books. So, now I've realized after having done about, 700 or 800 deals that's pretty rare, but it's good to be young and dumb sometimes.
It's good to be naive. Absolutely. Absolutely. So real quick, what kind of benefit has passive investing, the experience of your passive investor, what kind of benefit has it had on them?
A tremendous benefit. I've had a lot of investors that have been with me since day one. Some of the gun carrying cops from the very first fund, a lot of those guys, in fact, probably the majority of them, are still with me today. And it's been like 17, 18 or 19 years. They're still with me today. But I've had a few of them that exited out because, they gave me their kids' college money, and, they were with me for so long that, that by the time they took their money out, I paid for their whole kids' college education with the returns that they got. I had some people that put in, just a little bit of money, and then, my minimum investment at the time was like $5,000. That's how desperate I was, obviously. So, I had people that put in $5,000 and then, 10 years later took the money out and took a trip around the world, stuff that they never imagined that they would have ever had the opportunity to do. Now, of course, it's at a much bigger scale. We get, our minimum investment now is $100,000. We have a lot of investors that, put, several $1 million with us. And, for those investors, it's much more meaningful. I mean, they're earning a lot of income off the investments that we provide for them, or they're getting a lot of growth off the investments that we provide for them, for their portfolios, their family offices, or whatever it is that the case may be.
That's awesome. And I got another question. Say a new investor comes on board. What's that onboarding process look like for that new investor for you?
Well, the onboarding process is, it all starts with a phone call. And, right behind me on the other side of that wall is my senior VP of investor relations. I can hear him barely through the walls right now. He's on the phone with a new investor talking to them about what it is that we do. And literally that's where we start, is with a phone call to learn about that investor's goals and objectives, to make sure that the investments that we provide here are a good fit for them. That we understand whether they're a growth investor or an income investor. We understand their risk tolerance and get a sense of, which of the different investment alternatives that we provide is going to be suitable for them. So it all starts there. And then really, there's a lot of guys out there that, they'll drip market the hell out of you. And, every 2 days they're sending you an email. We don't do any of that. I mean, once we've had the phone call, you're on our list. When we have a deal, we'll let you know. Other than that, we're not going to bother you. And you probably won't hear from us. So I like to say we're the worst marketers in the world. But we really don't market here. I mean, almost all of our investors come to us through word of mouth and referrals. They understand our track record. They know how long we've been in business, and they wait for us to present the right opportunity for them. And when that opportunity comes up, we let them know.
So we're a passive investor show. What's one piece of advice you can give to the PI listeners?
The best piece of advice is to select your sponsors very carefully. There's this ongoing debate, the age-old debate of, what's more important? Is it the sponsor or is it the deal? And there's a misconception out there by a lot of people that you should be out looking for deals. You really should not be looking for deals. You should be looking for sponsors. And when you're out interviewing sponsors, potential sponsors to partner and invest with, what you're trying to learn from them is the way they think, the way they approach a deal, the way they underwrite a deal, how long they've been in business, what kind of adversity they've survived and how they handled it. What was the worst thing they've ever been involved in and how did they recover? You want to learn everything you can about that sponsor. And once you've selected a few sponsors that you think are really top shelf, then it's just a matter of waiting for them to present the right deal for you that's a fit for your investment goals and objectives. Don't be a deal chaser. Just go and look for the best people to partner with and wait for them to bring the right opportunities to you.
I love that piece of information right there. I love that. Brian, how can we stay in touch with you?
The best way to stay in touch with me is either through biggerpockets.com forums. John, you've seen me around there a lot. We comment on the same threads frequently. So, I'm always there answering people's questions to the best of my ability. Or, of course, they can contact us directly through our website, which is praxcap.com. It's short for Praxis Capital. So it's praxcap.com.
My final question, is there any meaning behind the company name? It's my favorite question to ask.
Yeah, actually there is. Praxis is a Greek word that loosely translated into English essentially means translating an idea into action. And that's really what we do here. We start with an idea and, we act on it and we do everything we can to make the best of it.
I love it. I love hearing the meaning of how things started. And that's beautiful. I love how you make it all come full circle. Brian, thank you for coming on, man. I really appreciate your time and what you delivered to the PI listeners. Thank you.
Thanks for having me on, John. I appreciate it.
Thank you, man. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet. Happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.